Welcome back, everybody. Here is our presentation of one of the more important key performance indicators called gross margin return on investment. It's my favorite stat. Don't let that chunky title of it throw you off. It's a really, really great statistic and one that you can learn to use pretty readily. We've got some really great definitions for you here to help you use it. But it's the best stat, I think, to measure both the profitability of the business and also how effective your investment in inventory is. Let's take a look. So, as always, we start with this quote from Lord Kelvin: "You cannot improve what you do not measure." This is the one that you really want to measure, okay? You're measuring your profitability, you're measuring your inventory investment. It is the best performance indicator for that classification, for that vendor, and also for your buying staff. Okay, let's talk about its definition first and foremost. So, the definition of gross margin return on investment, or GMROI, it's a measurement of how well the inventory is turning, combined with a measurement of how profitable that investment in that inventory is. When I look at the formula for GMROI, I'm looking at the gross margin dollars divided by the average inventory cost. And this is usually done over time. Okay? And typically it's 12 months. And the idea of it is when you look at the components of the formula here, you're looking at gross margin dollars. How much profit did I generate? Which means I'm also looking at how much did I take in markdowns? Did I not get the full gross margin that I wanted out of that? How much actual profit margin am I generating? And then the bottom part of the equation, the average inventory, I'm looking at what was my investment and how long did I hang on to it? If my average inventory is high over 12 months, it means I'm hanging on to inventory too long. If it's really low, then I probably have a high GMROI. I'm going to have a very good profitability, but maybe I'm missing some sales, and so maybe I'm not getting as much gross margin dollars as I could be. Okay, so we're trying to get the highest dollar value, okay, or for those of you that are in foreign currency, we'll have a higher base value. We're trying to get the highest value here possible, again, without missing sales. Okay, so here's an example of it. Last year, our sweater department had a gross margin of $120,000. Our average inventory cost last year was $48,000. So those are both the total gross margin and our average inventory, right? So therefore, 120,000 divided by 48,000 is a $2.50 GMROI. Notice that GMROI is always expressed in the base currency. Like I've used an example here that's dollars and cents, but for those of you that are using euros or what have you, it'll be in that base currency. But it's not 2.5, it's $2.50 or 2.5 euros or whatever the base currency is. Okay. What do you want to look at when you're looking at this thing, okay? So it's always expressed in either dollars or your base currency, like I mentioned, okay? And think of it this way. For every dollar you invested, how many dollars did you get back? Okay, so for every dollar I invested in that last screen, I got $2.50 back. And you may say, wait a second, that wasn't what my gross margin was. And it's not. It's a different thing. It's your margin divided by your total inventory investment over a long period of time. That's why turn falls into this, because we're looking at our average inventory investment and we're looking at margin over time. You can also think of this as a different way. If I break down the GMROI, the first dollar, or whatever the base currency is, pays for the merchandise. That's based on it being typically a 55% initial markup, okay? So the first dollar pays for just getting the goods there, okay? The second dollar pays for all of your operations: rent, payroll, advertising, insurance, technology, etc. The second dollar pays for all of that. Everything above that second dollar is profit. So the minimum, the baseline you want to have is a $2 GMROI. That's just break even. Then anything above that is profit. How do we use this guy? Let's take a look, okay? So we're going to compare the GMROI. We're not just going to look at a GMROI and go, okay, well, it's 250. Is that good? I don't know. Okay, we're comparing it from period to period. Did it get better or did it get worse? Why did it get better? Well, I got more margin out of the stuff. I got a better deal. I did a better buy. My customers liked it more. Or it got worse. I bought goods they didn't sell. I had to take bigger markdowns. I'm holding more inventory than I want to, okay? If you actually had a listing of all of your different departments or all your different vendors and you looked at the GMROI for each of them, you would be able to quickly identify where you're profitable and where you're unprofitable, and you could take action on both. In the world of planning, we refer to that as playing offense and playing defense. So, you often have a lot of DCS codes in Retail Pro, right? So if you do have a lot of DCS codes, and if you lined them all up from best to worst in terms of the GMROI, and you took the 5 best ones, you said, I'm on fire here. I want to make sure that I've got enough merchandise, that I've got it landed the right time, that I'm feeding it. And maybe I might even overbuy this a little bit and just see how high is up, okay? The bottom ones are the ones where we bought it and we like it and nobody else does, right? So based on that, you got to figure out, what am I going to do about that? Do I have inventory I've got to get out of? I've got to really control the buy here. I can't get crazy. Even if I like it, it doesn't mean that my customer likes it. Remember this great saying, the customer votes with their wallet. And if you've got low GMROI, it means they're not voting for what you're voting for, and you need to get out of those goods and into something else. It doesn't mean you stop buying the classification, by the way. If you're a restaurant and you make a lot of money on steak, it doesn't mean you don't stop buying dessert for your customer. It's part of the whole package. It's part of the assortment that the floor has to look like. But you have to watch carefully what happens with that statistic. And if you've got a low GMROI, you've got to manage what? 2 things, the margin and the average inventory. So if your margin is not great, lower your average inventory and get that one back in balance. Okay? We look at GMROI every single month. We make sure that we're measuring it, that it's marching forward, that we're squeezing more and more profit out of the goods. We're doing a better job of managing our investment. This, as a retail store owner, this, as a retail store buyer, is your most important statistic for that reason. You are measuring, are you profitable? And you're measuring how well you're investing in inventory. Okay. So what are we looking for? Well, we're looking for heavy markdown classes. We're driving the top part of this thing, right? Am I not getting the margin? We're looking for heavy inventory classes. Do I have to stock a ton of this stuff to get some sales out of it, and I'm not really getting the profitability out of it, okay? I like to look at this seasonally and certainly annually, right? Because you want to make sure you've gotten enough months into it that the statistic has some merit, has some value. And like I've been mentioning all throughout this presentation, this guy ties directly to your profitability. Why? It's a measure of what you've invested, and it's a measure of what your profitability is. Okay? Now, why do I call this my favorite stat? Why is it my favorite one? It's the only one, if you think about the other ones, that includes profit margin. Most people measure turn. They'll measure it based on cost, or they measure it based on units. Sell-through based on cost or based on units. This one actually includes profit margin as its definition, okay? And it's the only one that actually looks at your profit margin compared to your actual inventory investment, okay? And it is the stat which, when you focus on it and you really look at it and you study it and you understand it well, creates the greatest amount of cash flow to your business, okay? If you're really looking at your margin, you're looking at your inventory investment on a regular basis, that's going to be where you drive dollars into your business that helps you achieve short and long-term goals in any retail store. And when we work with retail stores, if they're struggling, this is where we start. We start with GMROI. We start looking at that to help us figure out where are the weak points and where are the strong points in the business, and how do we drive that business to greater success. And frankly, after reason number 3, do you need another reason? I mean, I'm telling a little joke there, a very little joke. But the point of it really is that if you're driving margin and if you're watching your inventory investment, you will be profitable. All right, how do we find GMROI in Retail Pro? Well, GMROI is there by department, it's there by vendor, and it's also there by style. I'm going to search for it by department, which is what I did up here in this bar. And then I found the department I want to look at. I'm going to click on the profile button. This screen will pop up. I can always change my date range to whatever I want it to be to look at the different stats. Okay, I looked at a year. And here's that stat in this screen right there. By the same token, you can run this in a report, which we've already done. I'm going to kick that report out to Excel. And let's look at some GMROI. So GMROI, remember something. It's your margin, okay, divided by your average daily inventory. That's where that is. So in this case, I want to actually take a look at 2 particular departments that seem to be the same, but they have very different GMROI. So I want to look at that with you and let you see what's going on here, okay? When you look at these 2 departments, whatever they are, their sales are pretty close, right? Pretty close to that one. Their average inventory is a little bit different, okay? And their ending inventory is different, right? Much higher here than here in both of these cases, okay? But if you look at it, their turns are really close, okay? Their stock to sales are really close. Their sell-throughs are really close. But their GMROIs are different. This GMROI is $3.45. This one's $4.74. Why? Well, definitely because of this versus that, right? Our inventories here are higher than here, and especially in relation to our sales, okay? I mean, you could say, well, these are higher, our inventories are higher, but my sales are higher, okay? Probably the other thing that's different here is going to be margin. Remember that GMROI, the top part of that equation, is gross margin. So although my turns are pretty close, okay, my stock to sales ratios are pretty close, my sell-throughs are pretty close, the reason these are going to be different is because the margins are different. That's what makes GMROI such a great statistic. It's including the margin and whether or not you're holding margin, whether or not you're being profitable or not. All right. A couple of times in this presentation, you've heard me say that GMROI is my favorite statistic. You can see why based on what you've looked at in this presentation. GMROI measures your profitability divided by your inventory investment over time. That's what makes it the best stat of all. So again, we talk about having things over a $2 GMROI. If you find that any of your GMROIs are less than $2, you're losing money in that area, and you've got to do something quickly about it. What do? You either improve your margin or you lower your inventory. It's one or the other. If you feel like your business is not getting enough cash flow, the first place to look is GMROI. I, as a consultant, when I take on a brand new retail client, the very first thing I do after I load up all their data and look at their sales and look at their product and look at what's going on, the very first statistic I always look at is GMROI. I take all of their departments and I line them up and I go, which ones are the best ones and which ones are the worst ones? The best ones are the places I'm going to play offense. I'm going to get in there and look at why they're so good and what else can I do to drive some more business there. Maybe we're not feeding enough inventory. Maybe we could feed a little bit more and generate some more sales and be even more profitable. Maybe I can expand the product line. Maybe I'm too narrow. Maybe I want to broaden it. Maybe I want to find some sister department codes that I might want to invest into because those are doing so well, and I want to make sure that the customer that comes in gets everything they can possibly get from me. On the ones that are the weakest, I want to look at my inventory investment. Maybe I'm completely wrong in terms of the inventory. Maybe I've got the wrong vendors. Maybe I've got the wrong price points. Maybe I've got the wrong assortments. Maybe I've got the wrong everything and anything there, and I've got to rethink the entire thing. But I look at the top and the bottom of that, and by looking at the top and the bottom of that, I can figure out relatively quickly for a store where they make money and where they don't and how we can drive them. And that's one of the ways that we help stores make money with that whole thing. So grab that GMROI stat, really study it, really look at it, play with it, figure out what makes it work, what makes it doesn't work, get your best ones, pour more gas on that fire. The ones that are the worst ones, you want to figure out how you're going to drive them up and get them to at least a 2, because you'll find there'll be some that won't. Sometimes it comes, by the way, from isolating old inventory. Look for your old inventory. Get that washed out of your system. A, that will bring cash back to your business right away, and B, it will improve that GMROI stat right away. This is an important stat. It's my favorite one. It's the one you should focus on first and foremost every single month.